Hey guys, welcome back. This is Tex. I'm sorry it has been a minute, but in today's video, I just want to give you my thoughts on the market. We're going to take a look at the S&P 500 on different time frames, see where we are in the trend, and what we might be looking for as we head into the next couple weeks, the next month, all that good stuff. So as always, guys, I really do appreciate you tuning in. Let's roll the intro and get started. Alright guys, so welcome back here. First of all, we are going to start out on the weekly time frame. We'll do kind of a top-down approach here. A couple things I want to point out. Now I threw a volume profile in here so we just kind of see where our important volume nodes are and everything. But of course, back here we have our COVID-19 sell-off. This was something like a 38% drop from all-time highs. Pretty significant drop, sell-off, I should say, in a very short period of time. Obviously, there was a lot of highly leveraged institutions and things in the market that had to get unwound in a very short period of time, which led to an unprecedented sell-off in a very quick period of time. I actually remember trading that when we had the whole stock market was halted, I think, for 2 or 3 days or something like that. Not the whole day, but for 2 or 3 days we had a couple of 15-minute halts or something on the entire stock market. It was just absolutely incredible to see. My point being here is that the bottom that we put in on that COVID-19 sell-off that led to this just absolutely Fed-induced rally to new all-time highs. I mean, just incredible, guys. We almost hit 5,000 here on the cash index for the S&P. That bottom measured our positive slope, and you can see that the slope we're measuring here, here's the top of the slope, here's the bottom of the slope. And the first weekly bar to close below the slope, except for this little pullback right here, is this week. Okay, so this week is the first week that we've actually managed to close a weekly bar below the bottom of the slope. So why is that significant, right? Well, if we're measuring the slope from this pullback low here from the COVID-19 sell-off and this incredible bull run we've had here, every time it comes to the bottom of the slope, the big money's going to try and save it, okay? And we're still here at the bottom of the slope, and this week they weren't able to save it. We actually got our first weekly bar below the bottom of the slope, which leads me to believe that we are probably going to continue to see lower prices. From a fundamental perspective, just quickly touching on that, why does this make sense? Well, we have inflation that's incredibly high. It hasn't been this high since the 80s or something like that, a long time ago. The important thing being that inflation obviously is bad for the market. It's bad for consumers. It's bad all around for everyone. And how is the Fed going to combat that? Typically, you would expect them to raise interest rates. However, with the supply chain issues that and the demand from basically the shutdown that we had during the COVID, the pandemic and everything, it might actually kind of work the opposite of what they are expecting. Now, I'm not a fundamental type of person here, so I honestly am not an expert at this, but I'm only bringing this up because next week there is a Fed meeting where they are expected to raise interest rates. That comes out on Wednesday, and it's also quad witching week, so we could definitely see some significant volatility in the market next week, in particular if the Fed comes out with some type of a surprise decision, either good or bad, right? If they come out more aggressive than what the market has been pricing in, we're definitely going to see, well, I wouldn't say definitely, but there's a high probability that we will see a pretty volatile reaction to that to the downside, okay? Obviously, if they come out more aggressive, meaning that they're going to raise interest rates more than what the market has priced in, or they're going to raise it more times than what the market has been pricing in, I would expect that to, lead to some type of a negative reaction in a very volatile way. Now, if they come out and say, hey, because of the war in Ukraine right now, which obviously is another kind of a negative catalyst in the market right now, there's a lot of uncertainty around that. If they come out and say because of that, we're going to kind of we're going to go a little bit slower on raising the interest rates. Now, the market might actually have some type of a pop on that news because that could obviously be seen as a positive catalyst. Like, hey, the Fed's going to still be accommodative for a little bit longer than what we expected, and we've been kind of pricing in that the Fed's been shifting to this hawkish stance. So, I'm not going to try to guess what the market's going to do. I'm just saying that we do have the decision coming out next week, so just be aware of that. And there's likely to be volatility either direction around that decision. I would would venture to say that it's probably going to be volatility to the downside, especially given the technicals and where we are. Again, our first weekly bar closing below this positive slope that we've held since the bottom of the COVID sell-off here in March of 2020. Okay, so looking at the weekly chart, if we do continue this trend down and we do break these lows, where are we likely to head to next? Well, I've got the volume profile in here. You can see we have this big volume pocket right here. We don't get a volume node that comes in until down here. That's going to bring you in around 3,900 or so. From a technical level, from a technical perspective on the weekly chart here, I've got this 3,914 marked out. That's going to be a big level of interest for me for the next possible area of support, or for the possible area for the market to find a bottom. You've also got that nice round 4,000 sitting there. So 3,914 on the weekly chart. Let's go to the daily chart. And for this one, you can see I have pretty much the same thing marked out here. 3,919 lines up with the next big technical level that I'm looking at. And that's pretty much in agreement with the weekly chart. Do want to keep in mind, that there's some pivot lows right here where the market could find some support. But again, this is inside of that big volume pocket on the weekly. Especially if we see some volatility come in, I'm not sure that I would really put a lot of weight on those holding. I think the bigger area of support that I'd be most interested in is going to be closer down to around that 3,900 area. So that's what it looks like here on the daily chart. Let's go down to the 4-hour chart. You can see that where we are right now, we've got this nice negative slope going up. That's just kind of threw a trend line on here to kind of help you visualize it. We had a couple of false breakouts here overall, really respecting this this negative slope. And if this trend continues in this direction, you can see that it might take us a little bit of time to get down there. On the 4-hour, again, the areas I'm marking out here is 3,901. That's going to be the big area that's in alignment with the weekly and the daily. There is a possible area of support coming in here around 3,968. Of course, here's our 4,000 hold number. This is the bottom that we found right here on this big gap down day, where we got this really nice rally off of that right back into the trend and then failed. And we are trying to hold a higher low here. So it's not over for the bulls. If we do hold, if this low holds and we do find some time to accumulate right here, and the bulls manage to break that negative slope, we could definitely see a significant move higher. Okay, now I'm not calling for that to happen, but I just want to keep an open mind here. This is how bottoms are formed, right? It has to come down, it finds an initial low, it comes up, it needs to accumulate and not break this low, and eventually, if it accumulates long enough, you could get the break higher, and then the bulls win, the bottom's in, and back up we go. But do the fundamentals support that? No, not really, not quite yet. Now, again, I'm not really a fundamental guy, but it's important to at least keep that in mind. So what is the more likely scenario? The more likely scenario is that this trend continues to, this negative slope continues to remain intact. We come back down to this low. We're going to be looking for new lows. A couple of areas here, again, 40.5. Here's your 4,000 whole number. You could easily see a move down like this, a pop up, a move down like this. I mean, it could be, a few more weeks, another month before we actually get down here, or we could have some type of big reaction next week from the Fed, and we could just have a huge drop. I think there's going to be a lot of people liquidating if these lows break here. Any of the bulls that accumulated down here from the bottom of that slope that I was pointing out here in the weekly, we are right at the bottom of the slope. We just closed below it this week, but we're still right here at the bottom of the slope. The bulls could still pop it back up and save it next week. I would not discount that as an impossibility. I think it could happen. Is it likely? No, I don't think it's likely, but just keeping an open mind here, guys, right? So I think that if this continues to play out, barring some significant volatility, we could definitely see this trend continue to trend down for quite a bit, ultimately looking again for around that 3,900 level. Now, how does that line up with the math? If we take a look at the math, yeah, it looks pretty good. You've got 3,973 as a level here. That's right around that 4,000. Again, that's lining up 3,973 with what we're looking at here. You got 3,901, 3,968. Let's go back over here. The next one down 38.24. Yeah, so somewhere right around that 4,000 to 3,900 level seems very realistic for our next leg down. Will that be the bottom? I mean, who knows, guys? I'm not going to be here trying to call a bottom, but I can just tell you based on what I'm seeing right now and the trend, where we are, what's likely from the fundamental perspective, I think it's, it's very likely that we will see new lows and we will see another leg down, somewhere around that 4,000 level, where I'd first be looking. Or that's the first area where I'd, be looking for the next potential bottom to come in. Now, if we go take a look at our internals really quickly here, I really just want to take a moment to focus on the VIX and see where we are, right? So this is the weekly chart of the VIX. You can see for the past 1, 2, 3, 4, the last 4 weeks, we've had weekly bars closing over this kind of 27.5 level. I think this is going to be a big level. You can see how this has been kind of a pivot for quite a while. We're getting these weekly bars that have been closing over that. If we continue to find newer lows, we could definitely see the VIX spiking back up here to 37.5. If things get very aggressive, we could start seeing it back up over 40. Now, it's been a long time since we've seen the VIX up over 40. I don't know that that would necessarily happen. Based on the slope that we've seen here, it's been a pretty orderly, pretty controlled sell-off. There's been some volatility, definitely some big volatility on some of these dumps, but overall, I mean, the volatility is nowhere near what we saw back in the pandemic when we just had this absolute just limit down, just destroyed. I mean, just absolutely, massive amounts of money that had to get unwound, and just massive amounts of money that had been leveraged since probably, the 2008 correction, right? Or bear market rather. So where are we right now? With the S&P's down about 13% or so off of all-time highs. We're technically in correction territory. The NASDAQ is actually down around 18%, which, bear market's defined as a 20% drop from all-time highs. Does that mean, just from a percentage perspective that we found a bottom? Absolutely not. I would never look at it from that perspective. But I think it is good to take into consideration where we are in the slope and where we might be going. So it's just a quick rundown on the market and where I see us right now, the possibilities that could play out as we head into next week. The bottom line being that as of right now, the negative slope and this correction that we're going through is still very much intact. And until proven otherwise, I'm definitely going to be looking at the market through that perspective. So hopefully you guys enjoyed the video. Again, I apologize it has been a minute, but I hope you guys are all doing really well. Thanks as always for tuning in. Take care, and we'll see you in the next one.